It is being said that the interest rate has hit 13%. From the last 12 months, it has never reached that far, 13%. So for the first time after 12 years, not 12 months, after 12 years, for the first time, the interest rate has hit 13%. So that could mean that inflation is actually high. So we are saying that there is a real rate of return or real rate of investment, and then there is nominal. The nominal rate is the one that has got inflation. So if you are supposed to say that our return is supposed to be 10%, that is the return, then this one can be real. And then now we have 10% plus maybe 2. So 2% is the inflation rate. Therefore, with the inflation rate, it can be 12%. It is quite higher than the real one. So this one is normally called nominal rate. The rate of return which takes into account the inflation rates is called nominal rate. The pure one without inflation in consideration is called the real rate of return. So let's look at this. There is a formula, or what we call, there is a formula or model which is called Fisher's equation that talks about this. We have Fisher's equation. That talks about this, and they are saying that 1 plus n is equal to 1 plus r into 1 plus I, where, so that is the equation, where n is the nominal rate, then we have r is the real rate, then we have I, this one here, is the inflation rate. Now, we know that you can get the NPV, we know that you can get NPV by discounting. And whenever you're trying to discount the cash flows, you normally use the rate of return or discounting rate. Then you discount, you calculate the NPV, all right? So that discounting rate or the discounting factor rate, you can either use the nominal rate or use the real rate. But now the determinant is, if you are told that the cash flows are real, then the discounting rate should also be real. If the cash flows are nominal, then the discounting rate should also be nominal. What are we saying? When you have invested somewhere and you're expecting some income, you have invested somewhere and you're expecting some income. If those incomes have taken into consideration the impact or the effect of inflation, then that one we call it the nominal cash flows. So the nominal cash flows requires nominal rate. Nominal cash flow requires nominal rate. So it is nominal rate or nominal cost or cost of carrying capital. I know that is Winnie. Winnie, welcome. I'm just starting, Florence. Nimesikia sauti ya Winnie. Kajua kuna wageni. Okay. So we are saying that we have just started here, Florence, and what we are saying is that today we are discussing about the inflation in capital budgeting. Now, inflation in capital budgeting means that when you are budgeting, you need to also consider the inflation. You don't just say that I'll get income of 10,000, but you don't know what inflation rate will be at that time. It can be 10,000, but when it reaches that time, inflation has pushed it. So you can even decide to increase something on top. So you say, let it be 12. A good example is on rental. If you're doing business today, you can say that the rental income that you're expecting to get maybe is 10,000 for the per room or per unit, 10,000 per unit. For 12 months, you expect 120 studio. And then you can say that now in 5 years, You're expecting maybe 60 or 600,000. But that is not true. After 2 years, you will start telling the tenants that, bei ya vitu imepanda, itabidi tuongeze some money. So you add 2,000. What are you trying to do? We had 10,000, which was the real expected cash flow. But now, because of inflation, you are topping up something. So that means that the cash flow you are now using is the cash flow that has got estimation of the inflation element. You have taken care of inflation. So what we are saying that there is a formula here, which is called Fisher's formula. This one is I. Fisher's formula or equation is used to determine the real rate and the nominal rate. So the examiner can give you the real rate and then tells you that the cash flows are nominal. And then they want you to calculate NPV using nominal cash flows. Whenever you are given real rate, I'm emphasizing on this, whenever you're given real rate, then it means that the cash flow must also match it. The cash flow must also be real cash flow. So you cannot mix them. You cannot have a real rate and nominal cash flow. And then you calculate NPV using different items of different nature or characters. So you need to have them matching. Then you also have nominal cash flow, nominal rate. So it is called a rate or cost of capital. Cost of capital. So therefore, it follows that we are going to have a nominal rate that is quite higher than the real rate, because on that nominal rate, we simply took the real rate, we added the inflation element. So this one is called general inflation or inflation. Just call it general inflation. So let's look at an example. Say illustration. Illustration. Assuming that you're given time, and time here would refer to years, and then we have nominal cash flow. The cash flows are nominal. The time is also there. Then we have 1, 2, 3, 4. Those are 4 years. The cash flows are 20. Let them even be millions or thousands. Don't mind. So they're like that. Then you're told that the initial outlay on an investment is 60. Then we have general inflation rate. Is 5%. General inflation rate is 5%. General inflation rate is 5%. The real cost of capital is 10%. The real cost of capital . Can somebody calculate for me from here? Can somebody calculate for me the nominal cost of capital? So from here, you can see, according to the information that you're given, we are being told that the real cost of capital is 10%, but the cash flows are nominal. So they are not matching. So the idea is to look at the question, what the examiner wants. Does the examiner wants you to calculate NPV? Because with this information, you can get NPV. You have the period, you have the cash flow, you have the rate, you have the IO. Does the examiner wants you to calculate NPV using nominal rate or nominal cash flow? Or they want you to use real cash flow or real rate? So you need to listen to what the examiner now wants. So let's start. Requirements, you can say required. Determine the NPV using nominal cost of capital. Determine the NPV using nominal cost of capital. Determine the NPV using the nominal cost of capital. Who has done for me that? Who has changed the rate to nominal rate? Nani amejaribu? Nominal rate. So if you are told to get NPV using nominal cost of capital, then it means that you have to change the rate to nominal. So we need to determine or the nominal rate. And how do you do it? Or nominal cost of capital, the same. We are saying that 1 plus n is equal to 1 plus r into 1 plus I. So n, you know what it means. We are given this and this. So we are saying 1 plus n is equal to 1 plus r is given as 10%, so it is 0.1. Are we together? Into 1 plus 0.05. You're going to have there 1 plus n is equal to 1.1 times 1.05. N is equal to 1.1 times 1.05 minus 1. What is your n? That is the nominal rate. Isn't it easy? Get me the answer? Somebody can take a photo and share on the group. Layers not seen. So we are having 15.5. Layers not written anything. Is that the correct answer? Okay. Now, with this, you can be able now to calculate your NPV. Because now you have nominal rate and already you are given nominal cash flow. You can be able to calculate your NPV still. So let's now calculate NPV. So we have time 2, 3, 4. We have 20, 30, 40, 50. That is a cash flow. Then now we have discounting factor at 15%, 15.5%, right? Then now we have NPV, we have PV, present value, there. Can somebody give me discounting factor? 15% for year 1? What is it? Year 1? Here. Discounting factor? $86, $85. Is that the correct one? 86.65. Then the second one. No, we can't be getting wrong answers. This thing is very direct. When I see Ruth and Winnie giving different answers, I know one of them is not correct. We can't afford to start getting it wrong from the start. I need the third person to now tell us the truth. So Ruth has corrected it. It's 68, eh? Is it 50? Yeah, 58. The second one. Fanya haraka, we need to do 2 areas if possible. Na hii ni refu, so we have to move a little bit faster. We have to move a little bit faster. Seven 0.74996. The next one. 6490. Then so let's get an NPV. Or I can leave this one. You can do an NPV now. Still. Florence, you have some questions? Go ahead.
Mwalimu, good evening.
Habari
ya jioni.
Good evening to you. Baje.
Sasa niko salama. I'm asking, we have 15.5% and tunatumia PVIP. So PVIP is 1 plus R negative N. Mimi hiyo year 1 I'm just getting 0.0606.
Those who have tried, tell me, what are you seeing here? 1.155. What do you get?
Mimi I'm getting 0.0606.
You're getting?
0.0606.
E.
Yes, mwalimu.
Are you guys sure that is what you're getting?
Nisomea ametype nini kwa nini kwa calculator?
Yeah, I'm getting
correct. No umetype?
Yeah, unaona, Florence. Very simple. Unaona calculator. 1.155. Then you put this sign E. Nakaa hivi. Alafu unaweka -1.
I think my calculator in a misbehave because I've done whatever you've written there. It's still giving me 0.060606. Sawa, tuendelee.
Okay. So hiyo utamalizia, sindio? You can now proceed here. You get the total.
Okay, mwalimu. Excuse me, I can Ruth can as well do it. Take 1, then you put this division sign, not this one AB over C, this one, then over 1.55. You'll get that answer. Just say 1, then put this this sign of AB over C is next to the square root sign. Then after that, unaweka 1.155. Then you'll get that answer. If you don't know how to use that inverted V, or if your calculator is misbehaving. Thank you.
It's true. It works. It works. Okay. So this one, I want you guys now to calculate this. You get the answer there, and that will be your PV. And then IO, you are given already 60. So you only minus, and then you get your NPV. Because of time, I believe that one you can do. Thank you. Simply calculate this times this. Naweka hapo. Pick hapo, get the total minus. You're going to get your NPV. Let's now use go to the second question. We can now go to the second question, which is asking, determine the NPV using real rate of return. We can now use real rate of return. We have used the nominal. So the idea here is that you make sure that you change everything to what the examiner wants. They have to match. Can somebody take a photo and share with Leah? Leah, anataka kuona hiyo swali ilikuwa aje?
I've shared.
Thank you. So real rate of return or cost of capital. So that means that we need to know already our rate of return or cost of capital is already in real, sindio? So we don't need to convert it. Tayari ni real. What we need to convert now is the cost of is the cash flow, because cash flow is nominal. So we need to change cash flow from nominal, convert cash flow from nominal to real. So that we use real throughout. Am I deleting so fast? Which one have I deleted? Ruth, nani, Leah? Hiyo wewe ndio umenipea answer, I'm sure. Hizo figures zote umenipea hapa have been given by the students. Right? So we are saying that nominal cash flow is equal to inflation cash flow. Yani cash flow with inflation in it. Cash flow with inflation in it. And how do we do it? So nominal cash flow is equal to the real cash flow times 1 plus inflation. Times 1 plus inflation. I'm trying to move at a little moderate rate so that we don't leave some people behind. Therefore, from this formula, we are now seeing that real cash flow is equal to nominal cash flow divided by 1 plus inflation. Divided by 1 plus inflation. So this is the general inflation that you're given. This is the general inflation that you're given. Hii ni sawa tu. We were having 1 minus n, which was equal to 1 plus r, and you know r was the real rate, times 1 plus inflation. So this is the inflation. This one is the same as this. Hii ni rate ya real, but sasa ni cash flow. Hii ni rate ya nominal, but is now nominal cash flow. So they are basically the same thing. They are basically the same things. And that is how you can also convert the real to nominal or nominal to real. So we are just driving the formula. So up to there, do we have any problem? We can now start moving, looking at now the figures. Leah, can I help? Can I?
Mwalimu ngojea kidogo please. It's
Sasa
okay.
bodi tena
Okay.
sahi. Hapana, wewe subiri, bodi imepotea. I still don't see the board. Wallahi, I don't know why.
Waziri, you can't see the board.
Now naona, wait 1 minute, niko hapo mwisho.
Can you see me?
Yes, I can see you on the board. Now you can delete. Mimi nimemaliza, sijui mwingine.
Winnie, I can drop. And
Yeah,
guys,
I'm okay.
move with my speed. Move with my speed because I write pole, so you can also have an hard time to write due to sound. Just move with my speed. Sitaenda mbio sana. So we were having our time. We want to now convert the cash flows from nominal to real. So we have time, and then we are having a real cash flow. So the first one was 20. So 20, if you divide by 0.05, what do you get? What will be now the real cash flow? Because these are nominal, we are converting them to real. So what do you get there? Then we have 30 divided by because of the years. We are putting that because of the years. This cash flow will be gotten in the next 2 years. $19. Are you sure? Don't round off, just give me the figure. 19 point. What are you getting, Ruth? Is it 19 or 19 point something? $0.47. The next one, 28.571. Guys, and don't just copy. Get me the correct figure here. Winnie, are you getting the same one for year 2? Because I can see Winnie has a different figure, 21. What is the correct figure? Ruth, try. Edwin is saying that it's 27. So yeah, Edwin equals sawa na ya Winnie. 27.21. Year 3. Let's do it together so that we don't get wrong things as we move. Tunasaidiana.
Why are we having the periods 1, 2, 3, 4 raised to power 3, 1, 2?
Which one?
Why are we having 20 divided by 1 plus 0.05 raised to power 1?
Oh, in inflation rate as at now, but we are saying now in the next 2 years, itakuwa imedouble. Ama itaongezeka. Though this is the estimated inflation rate as of now, but we know that inflation cannot be 5 years down the line the same rate. Right now inaweza kuwa hiyo, but next year itakuwa imechange. So you change it with a period like that.
So,
just like investment, the rate of return, you don't expect that whatever you're going to get this year will be the same next year because value for money changes. So the next one is 35. Can somebody confirm here Winnie pia kama iko sawa? Florence, hebu jaribu number 3. I'll be calculating these things by myself so that we have 1.05 raised to power 4. I'm getting a different figure. Hapa ni 41. 3. 35. Sawa. Winnie alikuwa amepata ngapi? 41. Haya, 41 iko sawa. Nyingine 34. Sawa. Lea iko sawa. Okay. So now these are now the real cash flows. Now the real rate of return, we can get discounting factor using real rate of return. We're given as 10% still. So you don't need to convert that because it was already given as real. You now just need to get here 0.9091 still 0.8. Hiyo ya pili inakwanga 82. Is it 82.65? 64. I know this is a 0.7. Can't remember. Somebody to give you that. This is on 0.6. Then now you can go ahead and get your PV. And then you get the total there. So you're going to get your present value icon. Can somebody get me these figures? Somebody to get me those figures. What are you getting? $75.13. The last one, 16.30. Then when you calculate them, there's something that I want you guys to test. I hope somebody has tried the first one. Ile tuliacha ikihang. Calculate the first one, I'll be doing this one. So ile ya kwanza, calculate please. When I'm done, you're also done. Give me the figures. The one that we left pending.
Mwalimu, adjust the board.
So are you guys done with the first one? The one that we left pending. Umeifanya? That is the first one. Ama hii. Wini hiyo ni gani?
Kwani majibu ziko same?
Are they the same?
Yeah.
What is the figure? Yeah, it is 90.
3.9.
Minus 60. So you're having 33.9. The first one is also like that.
Yeah.
Nice. That is what I wanted you to test. There we are racing because of time. We know inflation changes. This one is the inflation rate as at now when we are starting. So in the past year, if the inflation rate was 5%, we don't expect it to change, right? We assume that this year it will be the same. But now next year, you don't expect the inflation rate to remain the same. 2026 is still the same. 2027, it is still the same, not possible. So we try now to change it with a period. So that is how it is done. You now change it with a period. Just like in investments, you don't expect the same
Why are
return.
the answers the same?
I'm wrapping, eh?
Mbona majibu ziko same? The answers?
They should be the same because you have just adjusted inflation in both of them. If you use a different rate, or if you get it wrong, like now inflation rate, you have used the, cash flow is nominal, discounting rate is real, you'll not get the same answers. If all of them are converted, you've taken care of inflation in both of them, then they have to be the same. So it means that you have taken care of inflation when you are calculating the rate and also the cash flow. So if you have not taken care of inflation in both cash flow and rate, discounting rate, they will not be the same. So
Examiner wanted us to do the same thing twice.
Nani?
Examine.
No, the examiner was asking, calculate when you're using real rate and now nominal rate. So in exam, they can decide to only talk about real. If they talk about both, fine. It is not the same thing, but it's a way of testing. If you understand that you need to match the real rate and real cash flow, nominal rate and nominal cash flow. So let's look at the next part, illustration 2. This one is quite long, so let's be careful so that we move together well. It is advanced level of the first one. So say that initial cost of a new machine is given as 250. IO is given as 250,000. Machine lasts for 4 years. Machine life is 4 years. With a scrap value of 5,000. Scrap value of 5,000. With a scrap value of 5,000. Whenever you guys see scrap value, what comes to your mind? When you see scrap value, what comes to your mind?
Depreciation.
Yes, depreciation. Thank you. Depreciation comes to your mind. And then another thing that comes to your mind is the value, terminal value at the end of the year. That value of cash flow of scrap value is called terminal value. Okay, so let's look at the cash flows. The cash flows are given as year 1. Then we have demand in units. So we have year 1, 35,000. We have 40,000. We have 50,000. We have 25,000. Then year 1, year 2, year 3, year 4, year 5. 1, 2, 3, 4. So 4. Now, in capital budgeting, whenever you're given the units, the next thing that you should be looking for is the price, because it is through that price that will tell you the revenue. Another thing that should come to your mind is whether there were any cost, because now if you take that total revenue minus the cost, you'll be able to get your cash flow. So the examiner can give you the units. It should disturb your mind that you are supposed to be given the cash flow, but you're being given the unit, meaning that you have some work to do. The first thing that you look for is the price per unit. The price per unit will tell you what was the selling price and then the total revenue. After that, you need to check whether there was a variable cost so that you get your contribution. Then you look for fixed cost and then the depreciation rate. Is it a flat rate or it is a reducing balance? Those are some of the things that should start bringing into your mind when you get this kind of information, because you know very well, with this, it is not complete. You still have some work to do so that you can get your free cash flow. So let's now proceed. Write down there that selling price is equal to 12% per unit. Selling price is 12% per unit. Selling price is 12% per unit. Selling price is 12% per unit. The variable cost is 7.8 per unit. Variable cost is 7.8 per unit. Variable cost is 7.8 per unit. Another paragraph. The variable cost is 7.8 per unit. Another paragraph. Another paragraph. Incremental annual fixed production overhead. Incremental annual fixed production overhead is 25,000. Incremental annual fixed production overhead is 25,000. Incremental annual fixed production overhead is 25,000. Selling price and cost are expected to increase as follows. Selling price and cost are expected to increase as follows. Selling price and cost are expected to increase as follows. Selling price and cost are expected to increase as follows. Selling price and cost are expected to increase as follows. Selling price and cost are expected to increase as follows. Number one, the selling price at 3% per year. The selling price will increase at 3% per year. That is the rate of increase of the selling price. Every year inaongezeka na 3%. Variable cost will increase by 4% per year. Variable cost will increase by 4% per year. Variable cost will increase by 4% per year. Variable cost 4% per year. Variable cost 4% per year. Fixed cost 6% 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 per year. General inflation rate is expected to be 5% per year. General inflation rate is expected to be 5% per year. General inflation rate is expected to be 5% per year. That is not increase. That is the rate of general inflation. General inflation is expected to be 5% per year. General inflation is expected to be 5% per year. Real cost of capital is 5.7. Real cost of capital is expected to be 5%, 5.7% per year. Real cost of capital is 5.7% per year. Tax is 30%. Tax is 30%. Payable in arrears. Tax 30%, payable in arrears. Tax 30%, payable in arrears. Tax allowance or tax allowable depreciation. Tax allowable depreciation. Tax allowable depreciation. Tax allowable depreciation. Tax allowable depreciation is 25% on a reducing balance. tax allowable depreciation is 25% on a reducing balance. So Nelson has missed something. Let me see. You can share the screenshot of Nelson. Just check what did you write last? What was the last thing that you wrote?
I missed everything that you've dictated.
Yeah.
Everything that you dictate, nimemiss yote.
Okay, somebody can take a photo, share on WhatsApp.
Yeah, I'll be waiting. Sorry, I'm
That's
supporting
better.
someone or something else.
No problem. No problem. Now, if you were me, and then we have such kind of question, or you are an example, and then you have such kind of a question, then you are told now to calculate NPV. Where will you start from? We agree that everything that you do will help you get some marks. So where will you get some free marks from that information? If you
Cash flows.
Yeah.
Cash flows.
You start with the cash flow. You start with the cash flow. Where do you start from? Cash flow.
Meaning
Ungeanzia cash flow.
Calculation of nominal cost of capital.
Calculation of nominal cost of capital. Okay. One thing that I wanted to add, I hope that is leading. One thing that I wanted to add is that if the examiner is silent, you are given cash flow, but the examiner is silent, always assume that the cash flows are nominal. If the examiner is silent, unless the examiner says that the cash flows that you're given are real, if they are silent, assume that they are nominal. Because even the one that we use in other calculations that we have done before, they are always nominal. It is assumed that the people who are doing that have taken care of inflation elements. They have included the inflation. So unless examiner expressively says that it is a real cash flow. Now, Winnie is saying that we need to calculate, we convert. What did you say we convert? We want to see where we can get some free marks for the start. First, calculate the selling price of variable costs. Ruth, what can you do? First, calculate those nominal cash flow. Kuna mtu mjanja hapa amesema kitu. Winnie, depreciation and a reducing balance. You can even start with the depreciation. So let's start with the depreciation. Because that is direct. You need that depreciation so that you can calculate the cash flow. So with the jump, you have to start from somewhere. So the first thing we can do is to convert the cash flow from real, the rate of return from real to nominal. So rate of return from real to nominal. We have 1 plus n is equal to 1 plus r plus I. So we are having n is equal to real rate of return is given us Real cost of capital is 5.7. So we have that 1.057. Inflation rate is given. General inflation is 5%. Minus 1. Get me the answer. Those are 3 marks that you can start with. Look for 3 marks. What is the answer? What are you getting there? That is a 3 mark. At the end of the day, you have to calculate it. So
10.99 go to 11.
So you're saying it is 11, eh? Yeah. That is the first thing. The next thing is depreciation. Always start with the easier one. So that ukikwama, at least examiner anapata kitu ya kupea marks. This one is a mark. This one is also a mark. So year 1, depreciation, you only depreciate the cost of the machine. You don't depreciate additional expenses like the working capital. So even if you have working capital, you don't. So we had year 1, and we're going for 4 years. So year 1, the cost of the machine was 250. So times 25%. What is the depreciation amount for the first year? It is going to be confirmed. I'm just trying to say that 25 times 25 is 625. Then we have some zeros there. Now year 2, reducing balance, now we have 250 minus 625,000. Is it? No, 1,000, not 100. 100, sorry, not 1,000. So this one is 00. So we have that minus that. The answer that we get from here, multiplied with 25%. Now year 3. Get me the answer for this. Year 3. We have 250 minus 62 minus what? The answer that you're getting there. Oh, we are supposed to remove the scrap value. But now we are on a reducing balance. So if it is straight line, you take the figure minus the scrap value and then you divide everything equally. If it is on reducing balance, you know what we did the other time. You start by writing off that amount. The last year, you now take the full amount that imebaki, you pate 5,000. You need to know now how much should I remove from what I have so that I get 5,000. Hiyo yote unaweka. So you are getting which figure? Na utaona vile tunasonga. Who was asking? Mercy. Yeah, Mercy. Hivyo ndio tunasonga. So year will be deducted at the end of year 4. Yes, we need. That is true. Thank you. Mercy has given us, Ruth has given us for year 3, when year 2 bado. Wewe. How did you manage? Give me year 2. What is the figure? Thank you. So we are having 46,875. Thank you. So now this one minus 46,875. The answer that we're going to have here, multiply 25%. You are getting 31. 156. 0.5. 0.25. 35. 35. 156.25. Is it? Yes. Now, year 4. Masi now year 4. For reducing balance, year 4 ndio sasa unaweka hiyo square value. So what you do, you take the full figure minus division for the first year, minus division for the second year, minus division for the third year, minus 5,000 now. The answer that you're going to get is the division for the fourth year. What do you get? Times 25%, no. Sasa hiyo ya mwisho naweka tu, you are not reducing again. Because the idea is, Masi, we are told to do it on reducing balance. So tumekubali, tukafanya the first year, ile balance imebaki tena, tukachaya the second year, then the third year. But we are being told that we need now to do everything possible to make sure that at the end of the fourth year, the square value is 5,000. Itamaanisha that in the fourth year, we are going to ignore the 25%, but now we allocate the full figure that is going to remain as depreciation. So the original one was 250. Tushatoa hii, na tukatoa hii, pia tumetoa hii. And we are being told that inafaa tubaki na hii. So how much are we supposed to reduce so that tubaki na hii? We simply now minus this, then we are going to get that figure. So just calculate. Tell me, it is 100, 468.676. 100, 468.75. So those are the depreciation for the period. Now, after this, somebody can now tell me, what are we supposed to do next? Nataka tunatembea pamoja kwa sababu tushafanya hii kitu. If you are an example, already you have some 2 marks. You have 2 marks there. What else are you supposed to do? Ruth, can I rub? Winnie, can I rub? Leah is getting a different figure. Leah, just check. Ukiona unapata different figure, then know that if everybody is getting the same na wewe ndio uko different, then there could be a problem. Look at what Ruth has gotten. Topista has also gotten. Unless now I see somebody else with the same figure as yours, then I know that you might be right. Year 3 is wrong. That is what Leah is saying. Fine, Leah. So is there any person who is supporting Leah that year 3 is wrong? It's about taking the calculator. Let's take my calculator. Minus 62,500 minus 46,875 by When I calculate, I'm getting my answer here. 35,156. 5. So just check. Well. Okay, so what is the next step? Waziri leo amenyamaza.
Kuna kitu kibaya mwalimu, lakini niko sawa.
So you have gotten your rate. You know the depreciation. You now need to go and calculate the statement of cash flow. Next step, determine the annual cash flow. We calculate the variable cost, okay? Incremental cash flows, thank you. So, statement of cash flow. Statement of cash flow. So statement of cash flow, where do we start from? Statement of cash flow, you start by showing the years. So you can have them like that, horizontally, so that we have year 0, and then year 1, year 2, year 3. Because we have, we need to have them on arrears, we need to have up to year 5. Remember, we're going to pay tax in arrears. So instead of 4 years, we're going to have the last one should be 5. So let me start with year 0 here. 0, 1, 2, 3, 4, 5. 5, eh? So in year 0, that one is basically the initial outlays. No. Kuna kitu mingi, kuna vitu mingi hapo. So we are going to have our revenue now, but we have the demand units. So demand in units. So the first year, what was the demand? You are given there. Demand is how much? 35,000, right? 35,000. That is the sales in year 1. Not at the beginning of the year, but at the end of the year. If you say 0, 0 is at the beginning of the year, when we are starting the year. But this one is at the end of the year. How much did we sell? At the end of year 2, how much did we sell? So that is why I've not put it here, but I put it here because it is at the end of year 1, end of year 2. That is when you know how much you sold in units. You'll be able to know the revenue. While this one is for the IO. This is for the IO. So let's come to year 2. Year 2, we have 40. Then we have 50. Then we have 25. Are we together up to there? We are looking at the sales. These sales will give us the income. Now the next thing is price. So price the first year, what were we told? At the time we were starting the business, the price was 12%, was 12, eh? So when we were starting the business, that is in year 1, at the beginning of the year, it is 12. Tukianza ilikuwa hii. So at the beginning of the year, ilikuwa hii. Then now, you say it is 12%. 12% is 12 per unit. Per unit. Price is not percent, but per unit. 12 shillings per unit, sorry. Now we are told that it will be increasing. The selling price will be increasing at 3% per year. 3% per year. So year 1, it is 3%. Year 2, it increases by 3% again. Year 3, another 3%, up to the like that until the last year. That is year 4. Still, because we are making sales every year. So if at the beginning of the year, this was the price. At the end of the year, that is year 1, itakuwa umeongezeka na 3%. So at this point, we shall be having 12 into 1 plus 0.03 year 1. Umeongezeka. Are we getting? So what will be our new price? Inaongezeka na 3% every year. So year 1 itaongezeka na hiyo. So that is 12 times 1.03. What are you getting? At the end of the first year, the price will be 12.36. The second year, itakuwa imeongezeka tena. Now 2. So what are you getting? 1.03 is to 2 times 12. What are you getting? 12.73. The third year inaongezeka tena. Year 5, we didn't have any sales. So forget about year 5 when we're talking about sales. We shall look at it when we are now looking at the depreciation and taxation. But now, at the moment, we are still looking for the revenue. There was no sale in year 5. So get me the third year. What is the answer for third year? The price for third year is are you getting 11? Like I am getting. Are you getting what I'm getting? 11. Those are the prices. 0.6. Okay. So let's now look at variable cost. So variable cost is also increasing. So when we are starting the business, that is the first year, January, what was the variable cost? Year 0. The variable cost was 7.8. 7.8 when the year was just starting. So it is increasing at 4% every year. So year 1, it will be 7.8 into 1 plus 0.04 raised to power 1. What is the answer? 7.8. I'm hoping to get answers from you. What are the answers that you're getting? So 8.11. The second year. Fanya haraka haraka. For 844, alafu 77. So 8.44, 8.77, 9 point. The fourth year. So you round it off 9.13 or 12. I hope that you guys have confirmed the figures are correct. Don't allow me to use wrong figures. Four cannot change two. So, thank you. Now we have the cost. The only thing now we need to change is the variable fixed cost. Fixed cost. So in fact, this one should have been changes in cost, or how do we call it? But it is not statement of cash flow because we are still looking for the cost. So the next thing is to get the fixed cost. So fixed cost in year 0 ilikuwa 25,000 here. So we have 25,000. It is increasing at 6%. So what is the answer? What are you getting? The first year. 26,500. Eh? So getting here 26,500. And the second year. That is 0.90. Then we have 29.77, 5.4. Confirm that the figures are okay. We have 31,561. Point 92. 0.92. So those are the costs. Kindly write those ones well so that we can now go to the statement of cash flow. Go to the statement of cash flow. Maliza twende. Tuendelee. I'm assuming that we are okay. And you have all this written down, so we can proceed. Now, I hope that you guys have seen how the prices change. When you're told that there was an increment, you can do it like that, then you keep on changing the price, back up price emission. So if there is an increment every year, don't be scared. Just arrange them and then increase them yearly up to the 4th year, like that, the way you have done it. So now we can get the cash flows because now we know the units that are being sold. So income statement or cash flow statement. But the other one you can say price schedule. Statement of cash flow. Now we have revenue. We have year one. Let the prices be in thousands. Make your work easier. Thousands. Even this one. So we have year one, year two, year three, year four. Then we have year five. So revenue for year one. Revenue for year one should be, what is the price for year one? Times the quantity. Quantity was 35,000. You can see it's near 35,000 times 12.36. So what are you getting as a revenue for year one? Taka mnisaidie kucalculate. What are you getting? Year one. Yes, but now they are in thousands. So it should be, you got something like this, in thousand, it should be 432.6. Now you can round it off to 433. Or you can even leave it with the decimal so that we have 43.2, 2.6. Now year two. Year two, what are the revenues? We have quantity which is 40 times the price was 12.73. Year three, 50 times 13.11. Therefore, average 25,000 times the rate was 13.5. We didn't have sales in year 5. We don't have sales in year 5. Now let's come to the variable cost. So variable cost, you do the same thing, 35,000 times 8.11. Then we have 40 times 8.44. Then we have 50 times 8.77. We have 25,000 times 9.12. Are we clear up there? Now fixed cost. Fixed cost, we had, the first one was 26.5. Then the second one is 28.09. Then we have the third is 29.7. Eight. Is it? Can you confirm? Then the last one is 31.6. Confirm if those figures are okay. You can now get your profit before depreciation. Profit before depreciation and tax. What do you get there? You guys are so silent. Umepotea ama nini? Ama tuko pamoja? Watu wamelost ama tuko pamoja?
Tuko moja sana.
Sure, mjapotea? I'm just calculating because I know if I leave you to calculate, tutalala hapa. Tutakaa sana hapa. So we are okay up there. Now less tax. And now less depreciation still. Depreciation, we are calculated. Year one, we were having 6.62. Having 62.5, sindio? Year two, 46.88. And then year three, having 35.16. Here we had 1,000 point, was it 88 or 468? So it is 47. So the answer, what are we getting so that we can tax it? 122.25. That is profit before tax. Now let's tax at 30% on a reducing balance on arrears, in arrears. So we have,
Mwalimu,
yes,
so I think the depreciation for the last year ilikuwa ni 104,468.
when you round up in millions, is it 1004 or 104?
104.
Somebody to confirm. What did you guys write? Somebody to confirm. Ruth is saying 1004, not 104. So check your figures well. Thank you so much. At least umekumbuka. Ingekusumbua wakati wa revision. So the tax, 30% of that. So the first year we don't tax for the first year because it is in arrears. Tax for the first year we deduct in the second year. Are we together? That is what we did the other time. That is what we mean by arrears. So it is in 17.93. Are you getting what I'm getting there?
For the third year is 28.39.
28.39. That is tax for the third year. So are you talking about this or the product of this?
I've seen that you have 96.663 in year 2. The PBT, I have 94 point. Okay, let me just reaffirm.
Somebody confirm me, is it wrong or it is right?
Okay, yeah, I've seen where mine is the emanziapo depreciation. So kidangu nimeweka 46, 48 instead of 46 depreciation. So
Okay, so we are going to have tax credit on the last year, which is an asset. Today I don't want to put bracket, itasumbua rule. So nikiacha hivyo, this minus this, this minus this. So minus now, you can now minus. Niambie ni ngapi? I'm sure of this. Let me just, you're okay today. Ya 4 iko na shida gani? Ya 4 iko na shida?
Please mute. Winnie, please mute. We can't see the board.
Winnie, can you mute? We see the board banner. Tuna waste time.
It's your board. Sorry,
Sasa
sorry.
hiyo unaniongelesha aje na mimi sija mute. Umefanya ni unmute nikuongeleshe. Is that the way to talk?
Let's hold on. Let's hold on, guys. Are you able to see the board? Are you able to see the board? You're now okay, thank you. Pole. Professor. So hapa root is now 0. This one is like 0 minus 6. It becomes positive. Sasa minus. Accountants. Aya, certainly many. So I hope that we are okay up to there. Is there anybody with a problem? The figures are okay. So what is the next step? Florence is a problem, but now if I mute, you guys are going to make noise. I hope that we are not going to talk about anything apart from this. Let me unmute you. Proceed.
Mwalimu, depreciation yako ya the third year, mimi yangu ilikuwa ni 31,156. I'm seeing yours is 35. 35.16. Mine was initially it was 31,156. So if you round off, it should be 31.156. I don't know whether I'm the one who is.
Thank you. Can somebody confirm that she's right? Can you confirm that it's not 35? It should be 31. Flo is wrong. What is the correct figure, Jen?
It's the one that we are having.
Right.
Is saying that should be 35.
5.16.
The same. So then we conclude unanimously that is 35.16. So let's now add back our depreciation. So this one is profit after tax, right? So it add back depreciation, still. Ama ikoaje sivyo? We say that depreciation is very relevant. So you add this, we are adding depreciation in here 62.50. Here it is 46.88. Here it is 0.16. Then we have here, it is 100,000.47 now. Then here we didn't have the precision, so we just write that. So this one I can write 6.68. Even this one I know should be 122.25. The rest you can assist me calculate. Profit before, somebody saying that Mwalimu, profit before tax year 1 is 60.
Round off is 60. Round off is 60. Come
again?
Round off ni 60. 59.75 the same as almost same as.
Sasa tumeweka kwa two decimal places hivyo. Sivyo ndio tumeweka. Why should we round up this one na tuache hii? Na tumekuwa tukienda na 2. Hiyo hata hii ni round up ikuwe 3. Sasa tuendelee hivyo. Sasa haya. We have to be uniform. Okay, I'm not round up, let them be the same. 2 11 or 33. Remember, the more the decimal, the more accurate you are. The more the decimal places. So what are you getting? The figures? Now from here, I think you can proceed. We just now need to get them, to get our net present values, which I know you can now do. Can now determine NPV. Determination of NPV. NPV. So we have here, we have cash flow. We have discounting factor. We have NPV. Yes. Can start with year 0, 1, 2, 3, 4. So year 0, cash flow. What we told the investment? Investment amount was 250. So the cash flow in year 0 is 250. They are now in thousands. So we have that 250. Cash flow for year 1. This one now, 122.25. Year 2, 125.58. Year 3, year 3 is 158.26. Then year 4, 32.56. Then we now have year 5 because of tax credit, which is now 6.68. Discounting factor. Discounting factor. Which rate were you given? We were given, we had calculated 11%. Still, or what did we calculate? 11%. We did 11%, or say at 11%. At 11%. Now NPV. So this one is 1. Here we have 250 in bracket, of course. Discounting factor 11%. You can now proceed from here. Still, niache ama tuendelee. We proceed. The value of scrap value. Yeah, scrap value we can add on the last one. We can add it on the last one. is normally year 5 in the 4th year. So 4th year we will add, square value will be here. So we will add it on the 4th year here. It was supposed to be 5. So we are going to have that plus that. Yes. Either you do it like this, or you come here and say that on the 4th year, we now have 4th star, then you have 5, 0, 0, then now the 5th year, which was 6.68. But now make sure that the rate that you're using here, discounting factor ID, and this one are the same. Either you add it or you put them separately, but have the same discounting factor. If you are going to proceed, give me the discounting factors here. For your one, 11%, 1.11 raised to power 1. You will calculate for me this one. You get me the NPV figure. I'll calculate this. You calculate this and get me the figure there, please. So that we move very fast. Time in end. Hi. Guys, to me agree, you're giving me the figures here about Zico work. Where are they? Huh? What are my figures? We have agreed that you're giving me these figures. So where are they? Confirm if I'm all right. Thank you. Somebody has given me here. Are the figures okay? Why am I doubting them? Plus 1 is 3 point. But Topisa has given me 5. 1, 2, 3, 4, 5. So the last one, 3.97. I'm doubting. I'm doubting this one. What is the correct figure? B. I'm doubting this one. I don't know why.
It's 3.294 and the last one is 3.97.
Oh, this one is 3 point. Hii ni 3 point. Nitoe hiyo 2.
2144.
3.2144. Najua haisi kuwa ati 5.0, 5 times 0.6 inakuja 21, alafu 6 times 0.5 inakuja 3. Hiyo.
Okay, mwalimu,
Yes.
Najimik.
the 4 ni mbili, the years. Ebu angalia vizuri.
Itakuramba 4 iko mara mbili.
Okay, so this one is for this, for this, for this. Then now ahead.
So the 21 was just correct. For the
was 21 point?
44. 44.
44 ama 45. And then
Make
this other one, 3.97, 3.2, 29. Aya.
It's fine.
Year 4, 21.228. Sasa hiyo mtafanya hiyo. Hiyo mtafanya peke yenu sasa. About accuracy, that one you guys can check. Sindio?
You see, Ken, year 4, they are thinking that your discounting factor on year 4, it is 65.87. No, it is 65.37.
This one, not 80, not 80.
It's 87.
It is 37, check.
But I did the wrong thing, eh?
87, 65, 87.
587.
It's 87.
Mbona ya 4 iko mara mbili? Me, I'm not getting it.
Crop
This
value.
one, we are 4. The first one is for cash flow. Alafu scrap value here. So there are 4. There are 2. And the discounting factor is the same. So one is for the cash flow for the business and then the discounting factor. So NPV somebody has gotten to be 106.47.6. Pata aje 47.6 na tumeweka 2 decimal places. Ending. Hizo niambie ni 8 na za kubali. Inafikaje 3 when the products are hazifiki hapo 3. Aya, so 106 when that. Okay. I think that is the end. That's the end of that question. So we still have 2 areas that we need to look at so that we are done with topic number 1, topic 1. In fact, 3 areas. We still have 3 areas that we have to look at. Those can take us 2 or 3 classes. Tumalize topic 1. Any question? Topic 1 is the largest topic. The rest are at least better. This is the most time-consuming topic.
Dennis, jana uliacha question ingine pending.
Which one? I gave solution. Did you follow the solution? Well,
Oh, you sent it via WhatsApp.
Yeah, Z score is equal to the mean minus the lower standard deviation. And we said that because you are not given standard deviation, but you're given variance, you get the square root of variance. Then the examiner said that if the mean was supposed to be pi, anything that is lower than pi, what did you get as the average or expected? It was 50.6. something, sindio? So that is the mean, the expected. But what now is the determinant is this one. You're being told that find the probability that the company is not going to be taken by force or whatever term they used. So they are telling you that if anything is below 5, it is going to be taken by force, hostile takeover. But you got 50, so 50 is more than 5. So what happens? Look at the normal table, the normal graph. Looks like this. So the mean that you're getting, what you got was the expected. This is the mean. Inaandikwa hivi. Inaandikwa hivi. The mean. So this mean was here, 50 point something. I don't know. Was it 16 or 6 something? You'll check the correct field. So that means that if this is the mean, and that mean is equivalent to 0.5, a half of 1 is 0.5. So that is a mean. Katikati ya normal graph. Katikati ya normal graph. So if that is the case, then it means that the figures that are below here are less than 0.5, and the ones that are here are more than 0.5, maybe 0.8 something. Now, you are being told that if they are above this, then they are safe. 5 sasa iko huko, so hii 50 na imeanza hapa ikienda hivi. So 5 definitely is on this side. So it means that if the mean was to be less than 5, then that is hostile takeover. If it is above 5 going to this side, the average, then they are safe. So from here, this is a safe region. This is a safe region, mpaka mwisho. Now you are supposed to calculate this one, E area that shows that they are safe. Area that shows that they are safe. This area is not safe. So your mean that you got when you calculated, which is expected, is 50. So it means that you need to get this one up to mission. So that is what we are calculating here. So it is like 5 minus 50 point whatever divided by the variance. You're going to get 1.3, I think 37 or 41. Is it 41? You'll check. Whatever figure that you're getting here, go and look for it in the normal distribution table. You just go to the table, which is there, table near here. Well, for them to set you this question, they have to give you a table. They have to give you a table. So the table that was given, let me check the downloads if I have it. Hiyo question ya jana ni kama huko wana nilituma solution kwa group. Only Waziri said thank you. The rest hapo wana. So the table they must give you at the tail end of the question paper, utaona table. Table inakaa kama hii. This is a normal distribution table. So hapa ndio mean inaitwa mu. Hii sign inaitwa mu. So if this is a mean, then now you look at now z-score values. So what we are looking at now, this is a normal table. So you look at 1 point. If it is like now, in this case, we have 1.4. So you come to 1.4, and then you look at the column of 1 here. This is the probability. If it is 1.0, then you look at 1.0, then look for where 4 is. Hapa. So it is 1.04, 4 ndio hii. It will be 0.3. So that is how you are supposed to check. So look for the figure that you're going to get here from the table, and then you get the probability. So if they were asking you for the figure that is less than this, if part ndio wanataka, part, then now you can take that whatever you're going to get, then 1 minus that answer. Utaipata. 1 minus that answer. So if the answer is maybe 0.8, like in that case, I think it's 0.88 or 89. You now take 1 minus 0.89. The probability that they're going to be hostile takeover is going to be 0.10. or something like that. Kidogo sana. Yeah. So that is what I shared. You can now follow what I shared with you and finish the question.
Dennis, see, year 5 was negative. The previous question that we've tackled. See, year 5 was negative.
Year 5 was negative. So if you, yes, it was at year 5 was negative again. The one
cash
that
flow.
the one that just 0.6 negative 6.68.
Yeah.
Now this is a tax credit. It's only negative there, but it's as an asset. It's positive.
Okay. Okay,
Remember,
sawa. So the NPV.
we're having 0 minus negative 6.868. So hii sinakuwa positive. So hapo chini ni 6 point. Sindio?
Sawa.
Yeah. 0 minus negative. So they become negative and negative, it turns to be positive. It is a tax credit, it's an asset. Thank you. Time imeisha. NPV for year 5. Oh, wewe ndio umeuliza hiyo, si nimekujibu sasa. Si hiyo tax credit ni pesa utarudishiwa na KRA. They should return you that money to your account, but obviously they don't. For Kenya they don't. Sasa hiyo tunataka pesa sasa, na ukitaka kuomoka unaenda hamjui.
Tumemaliza.
Na nafunga meeting.